Okay, so we're going to take example 1. We've just done it on the indirect method. Let's make a B here and say on the direct method, how would this be done? So I'm just going to, underneath here, there's my indirect method for A. There's my direct method for B. And for that reason, I need to make up some information. When I'm doing the direct method, I'm going to draw up T accounts. Now you'll see in the information, they gave you balances for inventory, receivables, and payables. So I'm going to draw up an account for my receivables and for my payables and for all my other expenses that might be payable. And let's go and put in the information I have so far. Labeling the accounts so that you know which side they get bigger. It just keeps you less confused. Okay. So my receivables, I've got an opening balance, oh, that's inventory, sorry. I've got an opening balance of 24 and a closing balance of 28,000. So in my receivables account, I'm just going to say BD for balance brought down, opening balance of 24,000, and on the other side would be the closing balance, which was 28. Now, what goes into the receivables account? The things that make receivables go up is sales. Now this could be all sales because we don't know how much is cash. What could make receivables go down is when we receive money or we write off a credit loss. But you'll see this information doesn't have credit losses. If you did have credit losses, you would just put them in. Let me just move that down a little bit. I don't see them doing that to you in the exam, but just in case, let me just, move just that down. If they gave you credit losses or irrecoverable debts, you would have put them in. Because it's not cash, and that's why we would ignore it in the other system. Okay, it's not cash, and it does reduce what the debtors paid us. All right, now you'll see that this little income statement that I gave you, or that they gave you, doesn't have sales and cost of sales. They started with gross profit. So I'm going to make up numbers for sales and cost of sales. And we're going to assume, let's pretend sales was 450,000. Let's assume cost of sales was 360, and sales minus cost of sales gives you gross profit of 90. Just so that I can do this example. So from the statement of profit or loss, my sales are 450,000. And now very easily, if I balance this account, the big side will be 450 plus 24, which gives you 474, minus 28. And if you had irrecoverable debts, you'd minus that as well. Gives you cash received. So think about it, irrecoverable debts is not received, the rest was received, is 446. And that would be taken to the statement of cash flows. Let's do the same with payables. Opening balance 31, closing balance 33. Opening balance 31, closing balance 33. You don't have to leave a line, but I like to just do it in the order of the work normally. Now, payables will go up when I buy inventory. Oh dear, means it's like purchases, hey? Similar to purchases. I don't know what that is, and it'll go down when I pay. And that's the one I want because I'm doing the statement of cash flows. So I've got two unknowns in this account, so I actually can't finish it. But if you have a look here, I do have inventory. Opening balance 35, closing balance 25. So that means I'm going to draw up an inventory account. It's an asset. Let's get those numbers again. 35 and 25. Opening balance 35. Closing balance 25. My inventory will go up when I buy and down when I sell. Oh, hang on a sec. Do I have cost of sales? Well, I made it up, remember? So here I've got cost of sales. I made it up to be 360,000. Let me just change color. 360,000. So the cost of the goods that I've sold is 360,000 from the statement of profit or loss. And if I balance this account now, I will see, and I just want to change the color here because it's not from the statement of profit or loss. My purchases, the inventory that I buy, just not calling it purchases because otherwise it's a periodic inventory system. But here we can work out how much I buy. Big side is 385 minus the little side gives you 350,000 that must have been bought. When I buy inventory, I debit inventory and I credit payables. Ah, yay, now I've only got one unknown. So if I balance this account, the big side is 381. Carry it across minus the little side gives you how much I've paid my payables, creditors, 348,000. And then you would do an account for all other expenses. Of course, you could have kept it all in the payables account. You could have put all other expenses in here as well. And it would have been payables and other things you've paid. But I'm going to put expenses over here. If any of the expenses are still payable, you would put an opening balance for accrued on the credit side because you owe somebody, and a closing balance for accrued on the left-hand side to be carried forward to the next year. When you pay an expense, you will debit the expense and credit bank. That's the number we're trying to get. And you will close off to the statement of profit or loss the amount in the statement. And here we've got general expenses. Depreciation and loss on the disposal is not cash, so we'll take my general expenses of 17,000 to here. Now there's no opening balance or closing balance for accrued expenses, so therefore you may assume then that all expenses were paid in cash. If you look in your textbook, they'll actually sometimes say cash paid to suppliers and employees. Alright, so let's go fill in my direct method. So I'm just going to use the template that we had from earlier. Oh, where's it gone? Template. There we go. Direct method. So I'm going to copy that slide and put it underneath. And I'm going to... let me leave that there. Direct method. Let's go and put some numbers in instead of having little X's here. So what I was trying to say, Nana, is sometimes they'll say cash paid to suppliers and employees, and they'll have one line instead. You can do it that way. So let's go fetch my numbers. Cash receipts from customers is 446. Cash flows in 446. So no brackets. Cash paid to suppliers 348 in brackets because I'm paying. Cash paid to other people, so inventory, we're assuming all of it was on credit, that we bought on credit. So here we go. Paid to other people 17,000. And as I said, you could have done it in one. Then you would have had cash paid to suppliers and employees, one amount over there. Let me just change the color of that little curly bracket there. Doesn't really make a difference. In the moment of truth, cash received 446, cash paid out 348 and 17, and it's not a coincidence. Cash from operations is $81,000, which is exactly what we got on the indirect method. So it doesn't matter which method you use, you must get to the same cash generated from operations.